Let me tell you something most investors never figure out. Dividends aren't really about the money hitting your account. They're about rewiring your brain to make better decisions. And there's actual science behind this. Here's what nobody tells you when you're getting started. Growth investing triggers every psychological weakness you have. You're checking prices 5 times a day. Every red candle feels like you personally failed at something. You're constantly second guessing whether you should sell. You wake up at 2 in the morning wondering if you miss the next big winner. And here's the thing, this isn't weakness on your part. It's neuroscience. Your brain's reward system needs instant feedback to feel satisfied. Growth stocks give you absolutely nothing except anxiety and price charts moving up and down. No wonder most active traders underperform the market long term. They're literally fighting against their own brain chemistry. And the advice you get from financial gurus, just don't look at your portfolio. That's like telling someone with an addiction to simply ignore their cravings. It doesn't work because it completely ignores how human brains actually function in real life. Now, here's where dividend investing changes everything. It flips the entire psychological game on its head. First off, you get instant gratification that's actually productive. Every single month, cash deposits into your account. Your brain gets the dopamine hit it desperately craves. But this time it's rewarding patience instead of panic selling. Behavioral economists have a term for this. They call it positive reinforcement of desired behavior. You're training your brain to love the right things. Not price checking, not day trading, but holding quality assets that pay you. Second thing, loss aversion becomes your best friend instead of your enemy. Humans hate losing way more than they enjoy winning. It's called loss aversion bias, and it's hardwired into all of us. But with dividends, when the price drops, you're not actually losing anything tangible. You're still collecting real cash every month. That yield on your position keeps paying you while everyone else is having panic attacks over red numbers. The income doesn't stop just because the price moved. Third benefit, you get tangible progress that has nothing to do with market noise. Growth investors track exactly one metric: price. Up or down, binary, incredibly stressful. Dividend investors track multiple different metrics: yield on cost, dividend growth rate, payout ratio, monthly income, annual income growth. You've got several separate ways to prove you're winning even when the entire market's painted red. Make sense? Drop a comment and let me know if you've experienced this psychological shift yourself. I'm curious how many of you have noticed this difference. Now, let me tell you about the endowment effect. Once you own something, you naturally overvalue it compared to things you don't own. Usually, this bias makes investors hold losing positions way too long. They can't let go because they're emotionally attached. But with dividend-paying assets, the endowment effect actually works in your favor. You're bonding with companies that pay you consistently month after month. You hold through volatility because you're getting paid real money to wait. It's not stubbornness, it's rational attachment to cash flow. Fifth advantage, dividend investing removes the when to sell paralysis completely. Growth investors agonize over every position. Is this the top? Should I take profits now? Am I being too greedy? That decision fatigue destroys people psychologically. Dividend investors have total clarity on exit criteria. Does it still pay? Is the dividend safe and growing? If yes, hold. If no, sell. Decision fatigue drops dramatically. Here's the neuroscience behind why this matters so much. Dopamine is your motivation chemical. It spikes hardest with unpredictable rewards. That's exactly why slot machines are so addictive to people. Growth stocks trigger that same neural circuit. Unpredictable price swings, random gains and losses, constant dopamine roller coaster. Dividend stocks give you predictable rewards instead. That triggers serotonin, which is your contentment chemical. You're literally rewiring your brain from anxiety-driven behavior to satisfaction-driven behavior. Different chemical, different outcome, better decisions. If you're getting value from this, hit that subscribe button. I break down dividend strategies and early retirement tactics every single week. This isn't theory for me. It's exactly how I'm building my own freedom date. Quick disclaimer, I'm not a financial advisor. I'm not selling courses on how to get rich. I'm just someone who figured this out early and feels obligated to share it. Everything here is my own journey. Your situation is different. Your risk tolerance is different. Your timeline is different. Do your own research. But at least understand what's possible, because most people don't even know this path exists. Let me give you a real example from my own life. I've watched this psychology play out in my actual portfolio over the last few years. Market tanked significantly in a week. I'm completely calm because my dividend positions kept paying me the same amount regardless of what the price did. That psychological stability lets me buy more shares when other people are panic selling. It's not discipline or willpower. It's neurochemistry working in my favor instead of against me. Big difference.
The margin of freedom system is built specifically to leverage this psychological advantage. High yield dividend funds generating monthly cash flow, rising income year over year, regardless of market conditions. Your brain completely stops caring about Mr. Market's daily mood swings. Why? Because you're getting paid every 30 days like clockwork, whether the market's up, down, or sideways. Here's what most people miss about this approach. They think dividend investing is about being conservative or playing it safe. That's completely backwards. Dividend investing is about being psychologically aggressive in the smartest possible way. When everyone else is frozen with fear during a correction, you're buying more income. When everyone's euphoric at market tops, you're calmly collecting your payments and waiting. You're not smarter than other investors. You're not tougher or more disciplined. You just built a system where your brain's natural wiring helps you instead of hurting you. That's the real edge. Think about the difference in your daily experience. Growth investor wakes up, checks portfolio, feels stress or excitement based on random price movements. Dividend investor wakes up, checks monthly income total, sees it went up again, feels satisfied regardless of what prices did. Completely different psychological experience. Over months and years, that compounds into massively different decision-making quality. Better decisions equal better outcomes. Pretty straightforward math. Now let me address the skeptics for a second. Some people hear this and think it sounds too easy or too good to be true. Here's the reality. This approach is simple, but it's not necessarily easy at first. You have to retrain yourself to ignore price volatility. You have to build the system correctly with the right funds and the right allocation. You have to understand safety rules if you're using any kind of leverage. But once it's set up, the psychology takes care of itself. Your brain does the heavy lifting automatically. You're not fighting yourself anymore. I started doing this because I was exhausted from the growth stock emotional roller coaster. I made money sometimes, but I was miserable the entire time. Switching to dividend income was like someone turned off the anxiety switch in my head. Same market, same timeline, completely different internal experience. And here's what nobody warns you about. Once you experience this psychological shift, you can never go back to pure growth investing. It feels insane to own something that doesn't pay you. It feels like working for free or running a business with no revenue. Your brain recognizes that getting paid while you wait is objectively better than hoping for price appreciation. So you stick with what works. That's the secret to long-term success with the strategy. It's not willpower, it's psychology alignment. Here's my challenge for you. Pay attention to how you feel when you check your portfolio this week. Are you anxious, excited, stressed, neutral? That emotional state is data about whether your strategy fits your psychology. If you're stressed, something's misaligned. If you're calm and satisfied, you're probably on the right track. Drop a comment and tell me what emotion you feel most when checking your investments. I'm genuinely curious what percentage of people are actually calm versus stressed. If you want to see the exact approach I use to generate monthly dividend income while keeping my psychology bulletproof, check out the complete playlist linked in the description below. I break down the entire system, every allocation principle, every safety rule. And if you're serious about retiring years sooner than everyone else told you was possible, make sure you're subscribed. I post new content every week on exactly how to build the system from scratch. There's also a free lead magnet in the description that covers the 7 retirement myths costing you extra years of work. Grab that if you want the full framework. Join the community, watch the next video, and I'll see you in the next one.